is respected and sought after by top financial institutions. Salaries for CFA charter holders increase at a greater rate year over year than the general market. You can also stay up to date with the latest trends and knowledge in finance, such as AI and data analytics, with our regular updates, expert guides, and in-depth analysis. Completing the CFA program opens the door to a variety of careers in investment management and beyond. Current CFA charter holders include the CEO of a global asset manager, the founder of an executive coaching firm, and a space VC investor. In addition, you will join a unique global network of more than 190,000 financial professionals who have achieved the CFA charter. Ready to supercharge your career? Check out our other beginner's guide videos or visit the link on the screen. The CFA Level 1 exam is the first step towards building a fulfilling career in the financial industry and becoming a CFA charter holder. The exam covers 10 topics, including economics, quantitative methods, and finance statements. In addition, you will be required to complete one practical skills module that teaches the real-world skills you will use in your career. The module topics include Python fundamentals and financial modeling. When you register for Level 1, you will receive access to the entire curriculum, along with a wealth of materials to help you study for and practice the exam through our digital learning ecosystem. The CFA Level 1 exam consists of 180 multiple-choice questions split between 2 sessions. There are 4 opportunities to take the exam each year. Most candidates devote about 300 hours to study the material and practice the mock exams. To enroll in the program, you must be a university graduate or be within 23 months of graduation, or meet certain work requirements. You must also have an international travel passport. Ready to get started? Check out our other beginner's guide videos or visit the link on the screen. The CFA Program Level 2 exam will ask you to apply a deeper level of understanding to the topics and ideas learned in Level 1. And as part of your studies, you will be required to complete one from a number of practical skills modules, including analyst skills, Python, data science, and AI. The exam uses mini case studies, what we call vignettes, to help you work through real-world problems and answer multiple-choice questions related to them. The vignettes will test the 10 topics covered in the exam, including equity investments, fixed income, and financial statements. Each exam consists of 22 item sets comprised of vignettes with accompanying questions, split over 2 sessions, and there are 3 opportunities to take the exam each year. Check out our other beginner's guide videos or visit the link on the screen. The Level 3 exam brings together everything you have previously learned and asks you to justify your thinking by synthesizing information and applying solutions. The exam format is a combination of essay-style questions and multiple-choice questions across 2 exam sessions. You have 2 opportunities to take the exam each year, beginning with the February
ดีค่ะ Welcome to CFA Institute Research Challenge in Thailand, final round. I'm Sutirat Hongthong, Senior Society Manager of CFA Society Thailand, and your host for today's event. The Research Challenge is a global equity research competition that puts university students' analytical, valuation, and presentation skills to the test. The challenge is organized by CFA Institute and CFA Society Thailand. Each year, more than 1,000 universities from around the world are participating. For this year, local competition, we are honored to feature PTT Oil and Retail Business Public Company Limited, OR, as our subject company. We would like to express our sincere gratitude to PTT management team for sharing their insight, experience, and business journey during our company visit session. Their perspective has provided our student teams with a deeper understanding of the real-world business landscape, and we truly appreciate your support. Out of 28 teams from 14 universities that embarked on this journey this year, 4 have advanced to today's final round, showcasing outstanding research and presentation skills. But this competition is about more than just strong analysis and writing. We are looking for a team that can communicate their insight clearly, defend their findings under pressure, and present with confidence. And with such a remarkable participant this season, we are thrilled to announce that CFA Institute has approved 2 teams to advance to the sub-regional round this year. By the end of today, we will select the team that will present Thailand at the sub-regional level and hopefully on the global stage. On behalf of CFA Society Thailand, we would like to express our deepest appreciation to our esteemed sponsors. Your generous support has been instrumental in making this competition a success. The Stock Exchange of Thailand for generously hosting us throughout this 5-month competition. This sponsorship of the venue has been essential to bringing this event to life. Bloomberg for their invaluable ongoing support as our data service provider, embarking our participants to access world-class research tools. Kiat Nakin Patara Security Public Company Limited for sponsoring 50,000 baht for the winning team. Kasikon Asset Management for sponsoring 20,000 baht for the first runner-up and 5,000 baht each for the 2 second runner-up team. Lastly, Capital Market Development Fund for awarding CFA exam scholarship to all the 4 exceptional teams in today's final round. This opportunity not only recognizes student hard work and also encourage them to continue striving for excellence in the field of finance. These contributions from sponsors reflect their commitment to fostering the next generation of finance professionals. We are also immensely grateful to all CFA charter holders who have dedicated their time and expertise as mentors, graders, and judges for semi-final round. Your contributions have allowed us to provide a rich learning experience for all of our participants and play a key role in shaping the future of finance. Now, before we begin the final round, I would like to invite CFA Society Thailand Vice President and former Research Challenge Chairperson for an opening speech. Please welcome Khun Phasuvut Vilainiran.
Ladies and gentlemen, judges, faculty advisors, and most importantly, our students, our finalists. Good morning and warm welcome to the final round of Research Challenge in Thailand. Before the competition, I would like to give a sincere gratitude to all parties that make this possible. Our sponsors, Patra Securities, who has been our sponsor since I was setting this program up over 15 years ago. K Asset, who has been our sponsor for many, many years. Bloomberg, as always, our data provider, and Stock Exchange of Thailand for all meeting rooms, and this magnificent venue that we are here today. I also would like to give a special thanks to PTTOR, their management team, investor relation team, for providing students with the visit and analysis to the company. Such a scale is a gift, invaluable gift to our students. For that we are grateful. Finally, I would like to thank all the volunteers of CFA Society Thailand, our judges, our staff here, back there, that given their valuable time to make this event happen together. Before we start, I would like to spend just a couple of minutes talking to our students. This competition is designed to mimic the messy and accelerate reality of professional equity research. You have spent months digging into PTTOR fundamentals, financial statement, their ESG strategy, competitive modes, and so on. You have learned that buy or sell is not just a word, but its conclusion backed by 100 of hours of critical thinking. This experience will set you apart when you transition from students to professionals. The problem is, when many of us, me too, and a lot of judges here, started in this industry, the role of an analyst was defined by information asymmetry and a lot of grunt works, of course. Whoever could find the data first won. Today, data is everywhere. It's a commodity now. There's a lot to talk about AI disrupting the work of junior analysts. And let's be honest, AI one day will automate most of your tasks as a junior analyst. It will scrape the data, format the table, write an initial draft of the report, and even build DCF model far faster than any one of you in this room. So the sustainability of your work, your career, doesn't lie in your ability to calculate or polish presentation, PowerPoints, or even calculate WACC faster, but it lies in your ability to connect. Connecting information, finding the what finding why behind what that algorithm might be missing, connecting to people. This is the most crucial skill. Can you look to the judge into their eyes and convince and back your thesis with conviction? Can you translate complex data into narrative that your clients or your future boss can trust? When I'm hiring analysts for my own fund, I don't just look for the highest GPA or the perfect resume. I'm looking for a person who can bridge the gap between spreadsheet and human decision. And look for analysts who can persuade, who can handle pressure, who can communicate with clarity. And I think that's what financial industry is looking for in the future. Finalists, you already beaten out of a dozen of teams getting into this stage. So you should be proud of that. Regardless of who take home the trophy today, I hope that you are leaving this room with a real life experience that no textbook can provide. Today is just the beginning of your long career in finance, or maybe your other desirable fields. Use this experience to build your edge. So let the final round begin. And I hope our team, good luck. Thank you.
Thank you, Kun Prasawut Viraniran, for your warm welcome. Our event is being streamed live on the Research Challenge in Thailand Facebook page and YouTube channel. We encourage you to share this special moment with your friends and network on social media. And now let's go over the competition's rules and introduce our esteemed judge. Today, our 4 finalist team will present their research and our panel of expert judges will evaluate their work. The team with the highest scores will be crowned the winner, and the first 2 will go on to represent CFA Society Thailand in the next stage of the competition. It is my honor to introduce our distinguished judge, well-known professionals in Thailand's financial sector. First, Kun Orson Kanbarisut, Vice President Investment Department, Bangkok Bank Public Company Limited. Second, Kun Pacharachai Puthikun Sathit, Investment Analyst at NT Asset, covering Asian with key focus on Thailand and Vietnam market. Kun Pasin Pawasuthikun, Senior Vice President, Corporate Finance Department, Kietnakin Patara Security Public Company Limited. Kun Korpon Kunsurakit, Senior Fund Manager, Equity Fund Management Department, Kasikon Asset Management. We are deeply grateful to our judge for generously volunteering their time today with the extensive experience and deep industry knowledge. They will bring invaluable insight to these competitions. Now, let's take a moment to go over the rules for today's presentations. Each team will have 10 minutes to present, followed by a 10-minute Q&A session with our judge. As we approach the end of each segment, we will give an additional 5 minutes and 1 minute warning. And I will signal once more when the time is up. At that point, everyone must stop. Please be mindful to this time limit so we can keep everything running smoothly and on schedule. After the Q&A, there will be another 5-minute window for judges to share their feedback and recommendation for the team. This feedback is meant to help you grow and improve your performance, and it won't impact your scores. To ensure fairness, team will be referred to by their assigned letters instead of university's name. We kindly ask everyone to keep university names confidential throughout the whole presentations. Lastly, to minimize distraction and help everyone focus, please keep the noise to the minimum, silence your mobile phone, and avoid moving around the room during presentations. เพื่อไม่ให้เป็นการรบกวนผู้เข้าแข่งขันและคณะกรรมการนะคะทางสมาคมขอความร่วมมือจากทุกท่านนะคะในการงดใช้เสียงปิดเสียงมือถือนะคะแล้วก็ลดการเดินเข้าออกจากห้องระหว่างมีการพรีเซนต์นะคะและเพื่อให้การตัดสินเนี่ยเป็นไปอย่างยุติธรรมทีมพรีเซนต์ทั้ง4นะคะจะใช้ตัวอักษรแทนชื่อมหาวิทยาลัยจนกว่าผลตัดสินจะออกจึงขอความร่วมมือทุกท่านไม่ให้แสดงสัญลักษณ์หรือส่งเสียงระหว่างที่ทีมของท่านขึ้นนะคะ We are now ready to begin the first presentation. Could we kindly ask all the participating teams B, C, D, except for team A, you stay. B, C, D, please step outside to the room for now. Go on. And once each team has completed their presentation, you are more than welcome to stay and watch the other teams. Thank you so much for your cooperation and best of luck to all of our teams, and we're excited to see what you prepare. Let's begin with our first team, Team A. Okay, feel free to start your presentation whenever you're ready. The timer will begin as soon as you do.
Good morning, committee and everyone. We are Team A, and this is our presentation today. OR Thailand fuel station with the largest market cap. Seems interesting, right? But our valuation is as around 9.49 baht, or the downside of around 29%. So we conclude all our So we conclude all our presentation into the four letters, which is a TRAP, trap. Well, OR used a strategy that is a little bit different from others. They expand the market by the dealer-owned, dealer-operated model or the franchise. This model makes them be the market leader in both of the mobility and the lifestyle business. And they are the only one among peers that can have a business overseas as well. However, if we look at the revenue by segment, we will see that the revenue is mostly come from the mobility. And if we look it deeper, we will know that the highest EBITDA margins go to the lifestyle business, but it generates the revenue only 3.6%. So the reason behind this is because OR cannot control the cost of the oil because oil in Thailand is usually rely on the Thailand fuel funds.
So the next one we will go deeper about the OR retail ecosystem. OR is one of the largest retail chain with the non-oil business to attract the people to coming to station, spending and refuel their car. And the next one we will talk about the fuel structure. About the fuel structure, we will look at the crude oil price and the marketing margin. The crude oil price and marketing margin is not moving in the same way and not same proportion. The reason is coming from that Thailand have the Thailand Fuel Fund that act as the buffer for the consumer when the crude oil price increase, but it will squeeze the retail margin of the provider like OR. And the next one we will talk about their strategy. 80% of the OR is dealer-owned, dealer-operated strategy. It means that OR cannot receive full amount of the retail margin, expected around 1 baht per liter, compared to the peer that PTG that can receive full amount of margin. And the next one we will talk about the first alphabet, T, the chin margin. The largest scale cannot guarantee that they can capture more of the sale volume. The next one we will talk about the number of the fuel station. When we're looking at the northeast area, we will see that OR has the largest coverage and wide space of the station, but their sale amount is losing to the PTG that have lower of the station. The next one we will go deeper about the Bangkok area. That is the profitability pool for the OR and the target segment for premium oil. But OR can capture only 8% of the premium oil and lose to the PTG and BCP, meaning that OR left behind the margin around 10 baht per liter and have to struggle about the regular oil price segment. The next one we will conclude by the number of the station and the sale amount. When OR open more of the station, the sale volume tend to have less than before. Compared to the PTG and BCP, when they open more of the station, they have higher of the sale volume, meaning that OR cannot rely solely on the oil segment and have to diversify and expand to the non-oil business group.
So we're going to talk about the second letter, and it is about the EV. The new direct customer of the OR or the ICE vehicle user have been declining over years. And the reason behind this is because the coming of the EV trends. So I would say that OR is a good adapter. They are making the market leader of the EV charging station industry in Thailand with a focus on the fast charge or the DC type. So for the fast charge or the DC type. So which means that the selling point is the stop and go, like people use lifestyle service during the waiting time. But if the trend is still going, this is some severe risk as well. Well, this is the 2 years comparison. The first group is the same model. The clicker. The first group is the same model, lower price, which means that if the price is more affordable, the new customers are lower, leading to the low margin in the long run. And the second group is the new model better technology. Imagine if you have a round trip between Bangkok and Hua Hin, all model will require you to charge at least 2 times. But with the new model, you require to charge just only 1 time. So which means that the people that use vehicle user will visit the station fewer than the presented. And without huge amount of the charging assets, OR may have to redevelopment earlier than it should be.
Next is our final thesis, which is about the lifestyle business. Due to the lower time spending in fuel station, OR decided to invest in the lifestyle business to expand cafe, maison, hotel, and wellness to cover our lifestyle ecosystem. However, in the next page. They also face some structural challenge because the Thai coffee market entered the saturation phase, combining with the highly competitive from the peers like PTG that have the aggressively expansion plan, meaning that this will further decrease the average selling price growth down to 1% and decrease the margin pressure. And moving on to the next page, which is the result from our assumption. You can see that during the growth period, the growth is driven by the investment spending, while the mature phase, the growth is limited due to the highly competitive and the margin pressure. Moving on to the valuation and risk. In part of valuation, next page please. Okay, our target price is 9.49 baht that derived from 10 years DCF and DDM model. And here is our assumption. We predict that our mobility segment will face with the structural headwinds due to the EV disruption and sales oil volume contraction. Moving on to the lifestyle business, which is, the same page, okay, which is also faced with the challenge too. The challenge is the highly competitive from peers and the margin pressure. And the last one, our global segment, which is also still weakened due to the highly competitive from that local peers and geopolitical risk. In the next page is our result from the assumption. You can see that the revenue growth is still weakened, while the free cash flow expansion is quite gradually, but it is not because of top line business. It is because of the lower investment spending in the later period. And moving on to the next page, which is our dividend assumption. You can see that during the strong growth period, our dividend growth is 7% because of the return on investment, while during the mature phase, the growth will be decreased to 2% because our core business growth will be aligned with the Thailand GDP growth. And finally, the next page. We also compare our PE ratio with our peers, and we see that during the first period, OR was traded at premium because of IPO, but after that, it was not traded at premium anymore because investors lowered their expectation on this stock.
So moving on to the risks part, in our blue cases, there are two cases possible. So we assume EV traffic conversion and full domestic sourcing. Double performance pushing net earnings by 5%, also 8 to 10% as well. Conversely, bear cases hinges on three critical risk triggers. Firstly, R1, which is market competition intensifies. A 10% drop in average selling price leads to the reduction in net earnings by 6.7%. More critically, R2, which is supply chain. There's a high operation leverage, means a mere 1% margin squeeze leads to the reduction in net earnings by 3 to 5% as well. So we are mitigating over this by using our high margin non-oil business and also full domestic sourcing as well. The next one, R3, which is EV disruption. The real make or break is EV traffic conversion. So we need actually like a 5 billion baht EBITDA uplift. So if we only achieve 2.5 billion baht or like a half of it, there will be a significant negative effect on net profit and also asset impairment. So we must successfully transform our infrastructure into lifestyle hubs to capture this value as well.
Here's final comment on ESG. OR screen leading overall with external rating supporting the profile consistent of E and S are stronger pillar, while G is a relative constraint. EU screening signal suggests OR fit light green fund more than dark green ones, driven by high fossil exposure and moderate board diversity. On the environmental pillar, the company has expanded nature screening across 68 value chain locations, alongside a circularity agenda targeting zero waste to landfill and material waste reduction over the medium term. On social, indicator point to workforce stability under outsourced learning model, and safety system is framed around zero framework, supported by formal framework. On governance, the board independent appear aligned with policy expectation, and audit processing emphasize key audit matter link follow-up. Bringing it all together, we recommend sell. We frame OR as a trap from current level, and as our three core thesis suggest, the improvement in fundamental may not be translated into change in near-term relating.
Thank you.
Thank you. We're just going to start Q&A session.
Okay, I'll go first. So, first of all, good job, and just have a quick questions. So, when you do the sales recommendations, did you happen to do the some of the path analysis for PTTOR? Because they obviously have several business inside the company, right? And each of these business have very, very different dynamic, right? Cafe Maison, gas station, the other retail operation, and they also have a lot of investment portfolio on the side as well, a lot of startup, interesting one. So did you happen to do some of the part analysis that, break it down to make sure that your sale recommendation did not ignore some of the hidden value that may persist within the company?
So actually, when we do the sale recommendation, in our team, we decide to bring our part of this business, like OR, because OR have three main business, like mobility, lifestyle, and global, and we decide to bring it all together and try to find the assumption and the future trend of each business to think that if it is a positive or negative trend, and put them in our valuation and in the storyline of assumption to make our sale recommendation.
So out of your 9 baht target price, how much is coming from the gas station, the mobility business? How much is coming from Cafe and Maison? And how much is coming from the rest?
So we use the same proportion of the OR revenue structure, and the key revenue is the oil or mobility business, and we see the trend of the sale month decline every year. And right now we can see the last quarter of the year 2025, we will see that the sale amount is dropped down to even the fuel price is also dropped, meaning that they have lower of the sale amount, but they tend to have higher of the GP margin or gross profit margin from their, they have to expected receive more of the retail margin from the Thailand Fuel Fund that have not subsidized the fuel right now.
Thank you. Your target price of 9.49 is a 29% downside from market price 13.4. What are your three major calls which is different from market? Because the market is 13.4, your call is 9.49. Where is the market wrong and where are you right? What are the three biggest factors?
Okay, so the main assumption that we use to predict our target price 9.49 is first come from the mobility business, that the trend is changed because the EV disruption and also the oil sales volume contraction, as we mentioned in our investment thesis one. And the second one is our EV trend. As you can see that currently there is a lot of EV cars that grow in Thailand and also around the world. So we think that it is the future trend that we need to capture. So we decide to put it,
My question isn't your assumptions, but where you are different from the market view.
So when we compare to the peer station like the PTG or the BCP, we will see that the BCP and PTG have higher of the sale volume, and the move of the PTG and BCP have different move in the business inside, like the ecosystem.
My question is more on PTTOR assumptions, your assumptions versus the market's assumption, because the share price is 13.4 and your call is 9.49.
Okay, so I will repeat your questions again, sorry. Your question is, how does PTOR different from the market? Is it right?
So your target price is 9, right? The market price is 13, 14 baht, right? So obviously market does not agree with you. Right? You think differently. Something in your thesis is very, very different from the market, right? So what is that?
So please open the appendix slide about the historical price. Right now, we will see that the set index is increased. And when we first do our analysis back to like 5 months ago, we have seen that OR have at the lowest price, and right now the perception of the market and the OR is go between the set index is coming from the market think that the shock from the political news and the growth from the political news that leading OR to increase the price. Also, OR have released about the EBITDA margin from the quarter 4, and we will see that it's not have a lot of increasing in EBITDA margin or growth in the mobility side. So we'll see that in 10-year valuation, the trend will change, and it will not create by the shock like the political news.
I observed that you use only like DCF or DDM valuation for your target price, but if you compare with peers or trading multiples, what does it look like? Can you?
Actually, we base our valuation on DCF and DDM because we think that in this business, both model is quite effective for, because I think that the reason why we use DCF and DDM because now OR is quite a large company, but after the investment plan of 2026 to 2030, OR will decide to change them to like the mature business and decide to pay more dividends. So I think that I should use DDM to further predict their dividend in the next 10 years. And we also compare our P ratio with our peers, and we see that at first OR was traded at premium, as I said in the presentation, because of the IPO, but after that the investors changed their expectation on OR. Yes.
But from your target price, what will the multiple look like, and how you defend it comparing to peers? Whether OR will trade at very discount compared to peer, and why you think that will justify for your valuation?
So when we looking to peer like the BCP stock have composite with the refinery in their business, and also the PTG that also used more of the capital expenditure, we see that each three company that we use at the peer evaluation have different characteristics, and we think that for the OR, they tend to lose in their main business like the mobility business when we're looking at like the profitability or the sale volume compared to each other. And we think that OR have expand a lot of station, and I think that it is the saturate of the OR, and their strategy that they should use in the future is to utilize more of the station or the cafe maison more than open more of the cafe maison and station.
So now the oil fund already turned positive. Do you think they have any impact on your mobility business assumption?
Yeah, I think when we looking at the Thailand Fuel Fund, we will see a lot of drop down in 2022 and 2023, and right now it's become positive. But I think it will be the cycle like the shock of the crude oil price. So it's depend on the crude oil price, and in 10 years we think that the Thailand Fuel Fund will have this cycle repeated again, but the GP or the retail margin will tend to be higher than today from the people, and the crude oil price shock, I think it will minimize, but we have to look carefully about the news that related to global news.
I would like to add on that they have an impact from the demand side as well. Since it's true that the hybrid car is also the customer of the OR because they use oil. But the hybrid and EV have something that is same, which is if the technology is better, the car can drive longer. So which means that in the future, the technology will improvement. So among the people will visit the station in the future will favor as well. So here's the comparison. So this is an example that there are currently the EV cars that can drive from Bangkok to Chiang Mai without charging. And there are also a new technology as well.
Can you go back to your free cash flow slide, please? So when I see that, I was a bit shocked, because if I see a free cash flow like that on any stock forecast, in any forecast, right, it's definitely a buy for me, right? There was a chart where the free cash flow goes over the roof, right? So how come, I mean, what am I missing here? Are you assuming the terminal value will be zero? This company will no longer exist beyond your forecast period in the next 10 years? Because otherwise, your free cash flow is, yeah,
Okay, so according to
The time is up.
thank you for your questions ค่ะ
Now we will have a 5-minute session for feedback and recommendation from the judge.
Okay, I'll go first again. So, overall, good job with the presentation, but a few reservation, a few observation that I have as well. So, first, the speed, the pace of the presentation, it's way too fast, right? I really struggle to understand what you're trying to say, right? Especially the first half of the presentation, right? That's the first point. You gotta slow it down, right? You don't have to talk a lot, but you have to make it clear, right? Send the message across. That's what we are aiming to do here, right? So, and second point, you're trying to use this whole trap acronym, right? You have to fit and force your thesis into this TRAP acronym, right? Which to me, well, the first one makes sense, thin margin, okay. But the R and A and P, I fail to see any relevance. To me, it doesn't make much sense to me, and actually it's more confusing. It doesn't help, it make me confused, yeah. Other than that, it's good job.
Good job. I like the slides very much. You spent a lot of time and effort. I can see that. Just adding on to the presentation, it's more connecting to what you're saying and as to what is on the slide. There's a lot of good slides, a lot of words, and it's more like trying to connect yourself with the audience as to what you're saying, first of all, how you're presenting it, and then also what is on the slide. That would be more helpful. And the other point is on the valuation. You're using DCF and DDM, which is very sensitive to what your assumptions. Spend more time on what are the critical assumptions, the discount rate, including the WACC or the cost of equity, because again, this is what really drives the model, and there could be any blind spots like the high growth and free cash flow. And the last point on valuations is on multiples. When you say PE or EB, EBITDA, do make clear that it is forward, trailing, and so on, because there's many varieties, and of course, what price you're using. Okay, thank you. Good job.
So due to limited your presentation time, I think I noticed that you spend too much time on the EV slide. That I think is it's a large part on mobility business, but going forward, I think you see that the volatile in mobility that is hard to predict, but the non-oil business, I think this will be the good part that I think maybe you should balance between the detail on each business. Yeah.
Okay, I think just to add on to me, I think on the valuation part, I think you should spend more time on the, apart from DCF, because OI is also a market leader. And when you say they approaching a mature stage, so meaning that the industry might not growing that much. So it's the game about who gaining more market share, who losing market share. So to me, I think peers multiple and the multiple analysis is also very important for you before you draw a conclusion whether it should be a buy or sell. You should look at the peers trading multiple and how investor assign the valuation to the peers as well. Yeah.
thank you ค่ะ
All right, thank you for your presentation, Team A. You are welcome to stay and watch the other team presentations.
ครับ1 2โอเค
test test test
Test, test.
test test
Let's begin with our team B. Please welcome Team B. Feel free to start your presentation whenever you're ready.
OR, an oil retail giant, is standing at its inflection point. Once a cash cow, its oil business is being shipped away by competitors, while its growth engines starting to lose its power. Good morning, ladies and gentlemen. We would like to initiate a sell recommendation on OR with a target price of 12.19 baht, indicating a 10.4% downside. OR is the largest oil retailer in Thailand with over 2,000 PT station coverage, relying on its massive footfall of 3.9 million visitors per day to cross-sell its high-margin lifestyle business with Cafe Amazon as a flagship. Since its IPO, OR continues to expand, and further expand. First, expand its branches using an asset-light model. Second, expand its ecosystem by investments in new businesses. And third, expand internationally with a global segment. Now, if you look at the financials, despite contributing only 3.7% of total revenue, the lifestyle segment actually drives around 1/3 of total EBITDA.
So once we know more about OR, let's take a step back and look at the big picture. The oil demand in Thailand is projected to grow at 1.3% CAGR to 2030, but the growth is limited by EV disruption threats. With the backdrop of limited market growth, the competition is brewing. The oil retailers in Thailand is dominated by 3 main players: OR, BCP, and PTG. All of these combined selling over 85.7% of oil retail volume sold. While the OR is still the market leader, OR has been bleeding its market share to competitors, and they are now catching up.
Turning to the lifestyle segment, the chain cafe market grew at an 8% CAGR over the past 5 years and is expected to continue growing, however, at a slower pace going forward. In the max segment, where Cafe Amazon operates, customers' decision is driven by store availability, pricing, and brand familiarities. Given its positioning as value for money, differentiation is limited. And as competitors expand, the gap between brands is narrowing.
So once we know of these industry dynamics, the key question is how are these going to affect OR performance? We expect OR performance to be weakened due to our 3 S's. First, stagnant mobility business. Second, saturated lifestyle business. And third, slow scaling in new businesses. So let's start with our first S. Stagnant mobility weakness will weaken OR cash cow status due to limited market share gain and rising EV adoption risk. First, on market share. With the backdrop of losing share to competitors, OR management's target to gain a retail market share of 1 to 2% with 3 main initiatives: increase station coverage, improve non-oil and service offerings, and introduce more promotion. However, we believe that OR market shares recoup is hard, but OR has no strategic levers left to pull. First, on location. Further expansion could cannibalize existing petrol station as seen by persistent dropping volume throughput per station. For non-oil, these used to be a plus, but right now it is just a must as competitors are now catching up, and OR has limited space for further integration. Lastly, pricing discount has been introduced in 2025, but the impact on market share is very limited. Furthermore, OR is the most exposed to EV adoption risk due to its high reliance on gasoline sales. While EV Station Plus has been expanded to capture that demand growth, we believe that the path toward profitability is challenging and it cannot offset oil EBITDA loss in the projected period. This is driven mainly by low utilization rate and preference toward at-home charging by EV users.
With stagnant oil business growth, investors are shifting their focus to lifestyle business as a growth engine. But we believe such growth is reaching saturation. We anticipate Cafe Amazon revenue to grow at 3.9% CAGR through 2030 across three main levers. First, store expansion is expected to slow down. In the past, Cafe Amazon revenue has been driven by store expansion, but now network coverage is approaching saturation, as evidenced by underperforming openings. As a result, to maintain its growth, Cafe Amazon requires further focus to increase its revenue per store, which leads to our second and third levers. Second, cup sold per store will decline as competitors expand and open in Cafe Amazon proximity, especially Pantai, its main competitor, which has an ambitious goal to attain 5,000 stores by 2028, reaching the same level of store as Cafe Amazon. Third, revenue per cup growth is expected to slow down. As there is limited pricing power in the mass segment, Cafe Amazon can only rely on premium selected cups and non-drinks to increase its revenue per cup. However, their contribution to overall growth is still to be proven.
Given the weak outlook in the mobility and lifestyle segments, let's move on to our last S, slow scaling in new businesses. OR is seeking new growth to oversee expansion and investments. However, both of these initiatives face structural headwinds. Starting with the global segment, revenue is expected to decline and recover, but margins remain pressured due to shifting product mix towards oil retail. This is because we believe that Cafe Amazon would exit from Cambodia, which is its second home base. Next, if we look at the investments, OR's return from investments has never exceeded its return from cooperation. And if we look forward, the equity income has limited growth as it relies heavily on pipeline assets, while the lifestyle exposure is concentrated in Ottery, which operates in a red ocean laundromat market.
And with OR3 segment, mobility is structurally challenged. Lifestyle is maturing, and new businesses remain pressure. But with the current low trading price, our key question is the price right? Our conclusion is no, and I'll highlight the key drivers underpinning our valuation view. I'll start off with how our 3S thesis is reflected in the forecast. The 3S thesis form the foundation of our operating assumption, which translates to 1.4% domestic oil volume CAGR, 2.4% cup sold CAGR, and 0% global oil volume CAGR. This is due to slower gas station expansion, Cafe Amazon network saturation, and limited contribution from new and global businesses. We also expect marketing margin to stabilize around 0.96 Thai baht per liter, in line with historical and management target. And taking that together, our group revenue CAGR is expected to decelerate to 1% over 2025 to 2030, down from historical level. Our EBITDA margin will show a slight improvement over the forecast period. And with this operating profile in mind, now we move on to how it translates to cash flow. Despite OR's slower growth, we expect they will require sustained reinvestment. While total capex moderate over the forecast period, this is due to growth capex being on decline from slower gas station expansion and Cafe Amazon network saturation. But however, the maintenance capex will remain structurally stable due to ongoing asset replacement. As a result, reinvestment remains sticky, limiting any meaningful free cash flow OR can have. And as we put everything we have spoken together, our sum of the part DCF FCFF valuation has come to a target price of 12.19 Thai baht, with a 10.4% downside supporting our sell recommendation. This is based on the weighted average cost of capital of 9.23%, with a terminal growth rate of 0% for the global and mobility segment and 2% for the lifestyle segment. And by considering risk, we also have done scenario analysis where in the bull case, we expect it to be a whole. This is on the anticipation that the three segments will perform better than expected. And we also cross-check our target price with this valuation method and come to conclusion that we are on the right track.
We are confident in our sales call and have identified 5 potential upside risks that could change our recommendation, but only 2 of them are prioritized. First, if marketing margin increased to 1.15 baht per lead, it would result in 16.6% upside, recommending buy. Second, if Cafe Amazon could gain cup sold up to 1%, as well as retain its all-time high of EBITDA margin of 34%, it would result in 4.1% downside, recommending hold. Furthermore, we also conduct ESG analysis. OR helped generate income to over 17,000 community, as well as purchased 1.4 billion baht of coffee bean from the local farmer in the recent year. However, environmental progress remains challenging. Carbon emission continue to rise relative to its revenue, leaving its performance behind peer. On the governance side, with PTT holding over 75% of voting control and low tenure of management team, this results in the minority shareholder risk on the key strategic decision. To summarize, we are firm with our sale recommendation due to 3 assets, and this factor eroding our valuation premium. Thank you.
Thank you. Let's start Q&A.
Thank you for your presentation. You have a revenue growth of 1% per annum, and you have a capex down 6% per year in your DCF free cash flow calculation. What is your free cash flow growth in your 10-year projection? And can you explain how that come about into your DCF valuation of 12.19, please?
So to recap, the question is, what is the free cash flow growth, right? If you can go to the appendix on the valuation, FCFF build. Okay, so our free cash flow has been done based on sum of the part valuation, and the free cash flow growth is mainly driven by, the free cash flow growth has been constant on the growing side for the lifestyle segment, but the mobility and global free cash flow is also very limited and growing at a lower percentage.
So a follow-up to that question. So basically, I see you break down your forecast into 3 parts. Can you walk me through your sum of the part analysis? And what is the breakdown of that 12 baht per share value? Where is it coming from each of these 3 business?
Okay, for this business, so for the sum of the part valuation, we have this we have the waterfall over here, and then these are the value of each business.
What is bridge?
This is the enterprise value to equity value bridge. As the company does not disclose its segmental working capital, we could not identify whether which segment have which allocated the working capital. So that's why the enterprise value and equity value bridge exists.
To add on to my friends, the bridge here also consists of corporate overhead, such as other capex and corporate overhead costs, and also cash and other non-operating assets.
So one more question to me. So obviously your recommendation is sales. So when I talk about risk, it's a risk to the upside. So what are we missing here? What if the company stop all this expansion one day, right? And suddenly pay a lot more in terms of the dividend, right? Like we have seen in many other countries, right? Your business could be in slow decline, but there's still value to be extracted from such company, right? You see it in Korea, you have seen it in Japan, they call it value up, right? So what's the scenario here? What if they cut all the capex, minimize it over the next 5-10 years, and pay everything in dividend? What kind of dividend yield are we looking at? What kind of target price are we looking at?
Okay, so with that question, I think there is a certain chance that OR could have a different policy on capital structures and reduce capex. However, the management also has an ambitious target of capex guidance of having around 10 billion baht for capex over the next few years, but there is a chance that we think that there's a low chance for dividend payout policies as OR management has.
I know they're not going to cut capex, right? That's not what they're guiding, right? I'm talking about scenario here, right?
Okay.
And imaginative scenario here, because that would be the risk to your investment thesis, right? To your sales recommendation, right? Have you prepared that?
We haven't prepared that in terms of price, but we believe it's hard to do because OR has very conservative cash balance policies and they have not paid out any cash in very recent years.
Okay, thank you.
You have a downside of 10.4%, 12.19 baht. Where are you right? Where is your view right? And where is the market view wrong?
We believe that our view has been driven from consensus mainly on Cafe Maison and its lifestyle segment. If you go to analyst summaries, our view has different mainly on Cafe Maison. We believe it's going to be its growth going to be tapered down as competition intensify. Another some parts that has different from the streets is that our oil volume, we are more pessimistic on the market share in oil retail market.
How do you form your view? And what sources or what alternative info do you have beyond what consensus is seeing? Or is it just your view?
Sorry, can you ask your question?
You have a view on lifestyle which is different from consensus. How did you form that view? Do you have additional information that the consensus does not have? Or is it just your view?
Okay, we believe that we have some evidence towards our view on pessimistically on Cafe Maison. If we go to the key decision for purchasing a cafe, it's gonna be in the mass segment, the most comprised of store network, pricing, and brand equity or branding of the brand Cafe Maison. In store networks, it's gonna be threatened. It's gonna be threatened with newcomers. In pricing, many players has been introduced more pricing promotions such as PT Max Card. And for the branding, we also have some social media trends. According to the Google Trends, Cafe Pantai is exceeding Cafe Maison in terms of traffic search into the internet.
And to add to my colleague, if we look at the global brands, biggest chain by comparison, so by countries, Cafe Maison coverage is already very, very high relatively to other countries, which also have more coffee consumption per capita. However, we don't believe that with this constraint, Cafe Maison can further much more expanding with its current scale.
Can you explain on your gross profit margin per liter that you use for your base case? It seems to be like the most critical assumption for your valuation. How you come up with your 0.9 baht per liter?
So our marketing margin assumptions, can you go to the appendix marketing margin structure? For the marketing margin, we derive based mainly on due to the structural nature of OR. OR operating with total business model, therefore they have to share profits with dealers. This structure caps upside for OR. Another thing is that historically OR has very stable marketing margin and has little to no correlation to the market-wide marketing margin as seen by Apple. This is further confirmed by the management targeting around 1 baht marketing margin per liter.
For your sum of the part valuations, if you compare with peers, could you please elaborate more OR should trade at premium or discount to peers?
Okay, for the sum of the part valuation. So at this moment, we have did the implied EV/EBITDA by segment and also the firm-wide peer. So, so at this moment, we have done the peer group based on 2 criteria. So we have did the PE firm-wide ratio and we have did the segmental EV/EBITDA. So that's why we have 2 peer lists. The first one is in the oil retail industry where we put our firm-wide in and also our segmental mobility and global segment. And the other one is for the lifestyle peers where we have put in the some of the lifestyle segment in. So at this moment, we believe that with the firm-wide PE value, it will be higher than its peers due to that they have more leverage and they have more in the capital structure. That's why it's inflate the PE.
Can you go back to the Cafe Maison expansion plan? And I think you mentioned something about competitive pressures from Pantai as well. So what am I missing here? If the coffee market or the cafe market in Thailand is so saturated, why does Pantai is expanding so aggressively? And how come Amazon is not doing the same? What are they doing wrong? I mean,
So from our thesis, we separate the growth of Cafe Amazon into two parts. One is due to saturation and one is due to external competition risk. For the saturation part, as we have said, we don't expect with the already high coverage of Cafe Amazon to expand further. However, on the macro scale, the coffee market is still growing.
Look, why Pantai is doing better?
Okay.
Why can they expand? Why can't Amazon expand?
Pantai performance is better on the store unit economics. Pantai has same-store sales growth of growing, but Cafe Amazon cup store per store is stagnating.
Yes.
Another structural reason is
Why?
that... What?
Why?
I
Why
think
they're
it's-
selling better?
Okay, I think the reason they're selling better is they have a more aggressive on promotions and they have a lot of better brand. Lower base as well for the same-store sales growth. Another thing is that products might be more interesting as seen by social media trends.
Thank you.
Right, thank you. All right, time is up for Q&A. Now we will have a 5-minute session for feedback and recommendation.
I guess I can start. The slides are very good. I don't think my team can do this, and it's a bigger team. Just in the overall presentation, what would help in the financial analysis? You explained very well what each business and each segment does. It's more explain the context. What is the strategy in the petrol stations? More so than like, you know, we've grown this much before, we can do this much in future. And likewise for coffee, because like what Kun Patrachai said, I mean, how are you different from competition? What is your strategy and what are your economics? That would help to give context rather than giving numbers. The other point is you have 10 minutes and valuation is very important because that forms your thesis. Spend more time on valuations. It seems a bit short. I think you spend maybe like 4 minutes, give or so. But since that's very important, just give some more emphasis. Walk over your major assumptions, not all of it, just the major ones, the critical ones, you know, margins and discount rate and the like. That would help. Thank you.
I think you did a very good job with the presentations. I think the message is very clear. I get that immediately. There's 3 reasons, 1, 2, 3, why are we selling this stock, right? The rationale behind each of the key point was pretty good as well. The only negative feedback that I would give to you is that during the Q&A, right? When we ask the questions, right, and your friends answer, don't just listen to our question. Listen to what your friends are talking to as well, saying as well, right? If he or she already answered it well, move on, right? You don't need to waste more time, right? If the answer is already good, don't touch it, right? Move on to the next question. Open yourself up to the opportunity to handle the next questions, right? Thank you.
Okay, agree with the judge นะครับ I think very good presentation, precise and easier to understand. The only comment from me will be on the gross profit, gross margin per lead. I think I quite lost on your earlier presentation, and then after you present your valuation, then the wrap up on your sensitivity on the valuation, you seem to suggest that the number 1 critical assumption is gross profit per lead. So I think if that is your analysis, then you should also emphasize this in your earlier section as well. Yeah.
For me, I think you did well on the presentations, on the slide sequence. I have a little comment on the slide that you do sensitivity that will have a downside, upside. You mentioned that you have upside on the mobility business, but have downside on the non-oil, the capsule, right? That made me a little confused that so it's maybe upside or downside on your view on your recommendation.
If I may, if you have time, just one more. The valuation side, right? This is a perfect company to be using sum of the part. It should be your main valuation method. You can break it down and you can value each part of the business using multiple or whatever method that you prefer, but it has to be sum of the part, right? There is a clear distinction between each part of the business in this kind of company. So start with that, always, okay?
Could add on is explain clearly why you use free cash flow DCF and not multiples or anything else. There's many ways, so you just have to convince why you choose what you chose.
Thank you for your presentation. You are welcome to stay and watch the other team presentations. All right, right now we're going to take a 15-minute break. Snack boxes are available outside at the reception desk for you to enjoy. Please remember, no food or drinks are allowed back in the hall, so please finish your food outside. Thank you. Let's begin with our third presentation. Please welcome Team C. Feel free to start your presentation whenever you're ready.
Thailand's oils and retail market today is not what it used to be, and these changes is not in OR's favors. Most of the investors believe that the stocks has bottomed, but we think that the bottoms is still far ahead. Good morning, distinguished audience. Today, we are here to issue a sell recommendations with a target price of 11.84 baht, representing a 12% downside from yesterday's closing price. And this is driven by the triple delusions. Now, the first thesis, the market believes that OR scale can still defend the growth, but we think that scale is no longer enough, and it started with a disconnected core business. First of all, OR operate across three segments, anchored by Thailand's largest fuel network and a leading coffee brand, now replicated across different countries. With most of the revenues coming from mobilities, but lifestyles already deliver a larger share of earnings, so scarcity mobilities and values in lifestyles. But this disconnected matters when the fuel demand stops growing. And it started with Thailand, who's entering a peak oil demand because of slower growth and a post-elections energy shift with the support of electric scooters and solars, in addition to the EV adoption flattening the volumes. And China shows us the results. Once the demand peaks, scales no longer protects its values. And OR is already losing market shares in these markets. In response, they built an ecosystem. However, our survey showed that only 70% of the visits are driven by facilities, which is not loyalties. And that facilities is 7-Elevens. However, with the trends of 7-Eleven standalone, they're trying to opening next to OR stations. And that will divert the traffic away from OR immediately. And OR ecosystems are being replicated, where peers like PTTs and Bangchak now offer a similar stations, retails, and coffee, which is often side by side. Now, when everything looks the same, customers choose by locations. And OR ecosystems are even less competitive, where peers are offering larger loyalty platforms, offering the same model but even more efficiently than OR is doing. And peers are even expanding faster because they are mostly company operated, while OR focusing more on dealers, causing it to have a slower expansion and limiting pricing controls. And this disadvantage worsens when the demand shifts. With the EV adoptions reduce the gasoline demand, where OR network is the strongest, leaving the remaining demand on diesel, which is on the secondary roads where peers like PTTs are even better positioning than OR. And now, the non-oil, the margins driver, but still fail to defend the market shares. With the slow growth in coffee consumptions, customers switch easily and competition is intensifying. Peers are accelerating. Peers like Panthai, who expand aggressively ahead of its IPO in 2027, opening next to Cafe Amazon, and even offer a stronger loyalty platform to pull the traffic away from OR. And with that, leading to a decline in oil sales and a negative same-store sales growth, OR face both pressures of its core business and profit engines.
The market believes OR investment will bring growth back, but we see value destructions, and that brings us to disappointed investments. Texas Chicken was intended to strengthen OR ecosystem, but failed due to weak profitabilities. Mistakes in the past seem to repeat themselves in the futures. One of OR future plan, budget hotel, fed with market trend. Travel is shifting toward one-day trips, and intense competitions keep return below the cost of capitals, as seen in Motel 6 because of declining occupancies. And now, OR Space aims to drive customer traffic by connecting different businesses in one place. However, OR Space Pongpet struggle to attract customers with many empty units and low usage. At the same time, OR space Sukhumvit face strong competitions at nearby mall hubs, better locations, and more attractive shops. However, based on our survey show that 10% of customers use both EV charging and auto service, indicating a weak ecosystem link, and with 5% charge at public stations, leading utilization remain low and creating no synergies as reflected in negative same-store sales growth. So, we believe this investment don't create the value and leading our OIC to fall below WACC.
Next, D3, damage underestimated. Market see this shock as temporary, but we believe the impact is deeper. Over the past few months, tensions hurt our business in Cambodia. Customers start avoid Thai brand stations, and some dealers are to switch brand. And this reflects in same social growth that continued to decline. And now, with the main political parties support more on foreign policy, then relations with Cambodia may not improve soon. So, we expect same social growth to even decline further. At the same time, OR investing heavily in business with a high fixed cost, especially in mobilities. And revenue become unstable, but the cost still high. Profit will become more volatile, and this increase OR business risks and lead to higher equity betas. In addition, OR ESG projects, including vapor recovery units and op-om clinics, both of these create social and environment benefits. But unfortunately, these good projects create loss to the business. On the governance side, with the state controlling parent company, decisions tend to focus more on national goal rather than shareholder returns, and these reflect in the low score at shareholder votings. Now, let's take a look at the numbers.
Revenue stabilized in 2025 before declining at a low negative number over the forecast period. Mobility revenue declines at 1.4% CAGR from lower fuel volumes, while non-oil revenue grew at only 1.3% CAGR, which is insufficient to offset oil weakness. Global revenue contract at 3.2% CAGR, driven by Cambodia and limited scalability. Margin improved slightly, which is supported by a temporary uplift in oil marketing margin before flattening and gradually softening thereafter. EBITDA margin peaked at 3.8% before declining to 3.4%, which reflect the erosions of OR competitive advantage. Inventory days are rising from slower sales, while DE increases as the company uses more debt to reach its target and to maintain relationship with banks. Altogether, EPS growth keeps growing over time. Now, let's see whether OR is a good investment. We assess OR using some of the part DCF supported by relative multiples. For DCF, we value each business separately, and since OR have many business segments, in order to get the most realistic value, these mind map show a new breakdown, which reflect long-term pressures on fuel volumes. For example, Gasohol 91, we start by forecasting Thailand fuel demand by using regression model with related key variables, and then multiply by OR expected market share adjusted by SWOT analysis to reflect long-term pressures on fuel volumes. For price assumption, we break down the price structures and forecast each component separately by using regression model. New station sale follow management expansion plan, but we also check feasibility by using Google Maps to reduce cannibalization risks. We use moving rack based on different segments because debt to equity changes every year. While terminal growth converges toward Thailand long-term inflations, but we also supported by sensitivity analysis, which reflect the limited valuation upside. To support our DCF analysis, we use EV per EBITDA, and due to the lack of comparable peers, we use statistical approach. And as a result, both of these show the stock is very priced to be overvalued. Every investment comes with uncertainty, so what could change our view?
We have identified two key risks that could challenge our sell recommendation. The biggest upside comes from lower oil field fund contribution. If the marketing margin rises by 45%, we would change to a buy. Another risk is lower EV adoption. EV sale would need to fall 25% below our base case to change to a buy recommendation. And to complete our analysis, we ran 100,000 times of Monte Carlo simulation, and 84% of the results continue to support our sell recommendations. This leads to
I'm having some trouble understanding the 11.84 target price. It's a combination of SOTP and DCF. Can you go through the SOTP again? Because it was very quick. And the assumptions behind them.
For doing some of the part DCF, to answer these questions, thank you for your questions. We break down companies by the company structures and we forecast and we do the valuations of each company one by one to get the target price of 11.84 bahts. Thank you.
Can you break down by business segment?
To break down by business segment, for example, for the parent company, which is 11.06, we break down to be both mobilities and non-oil, which is Cafe Amazon, is the main. So we forecast revenue for each business, and then we do the valuations of the parent company. Thank you.
That's how you do some of the part. You don't have to tell us that. But basically, we want to know how much of that 12 baht, 11.8 baht share price, target price, how much of that coming from the gas station business, how much of that coming from Cafe Amazon business, how much of that come from Ottori, Okaju, Pacamara, and other investment that they have made over the years. Have you done that?
Yes. Thank you for your questions. For the target price from 11.06, 80% is come from mobility business because mobility is the main business of OR, and the rest will be Cafe Amazon. And for
so 80-20. So out of that 11 baht, 80% come from the gas station.
Yes.
20% come from Cafe Amazon.
Yes.
Right. Can you go back to the slide where you break down the EBITDA? There's an EBITDA breakdown in one of your slides, and I believe that Cafe Amazon contributes 35% of the company-wide EBITDA. So how come a business that contributes 35% to the overall EBITDA of the company accounted for only 20% of the valuation?
To answer these questions, we believe that Amazon, they will losing competitive advantage in 2027 based on our assumptions, and we believe that they will losing market share, so it will make the EBITDA contribute lower.
So the valuation multiple is even lower than the gas station. That's what you're saying. The valuation that you assign to Cafe Amazon is even lower than the gas station.
Yes.
So they're declining faster, even without the EV adoption and everything. They will even decline faster than the gas station.
Yes.
Okay. Why?
We believe these points my colleague will elaborate more.
Thank you for the question. So first of all, OR non-oil, especially Cafe Amazon, will lose competitive advantage based on the peer expansions like Pantai. And also there are a potential that limited the upside for OR non-oil, which is the emerging coffee in Chinese brands that are trying to penetrate in Thailand's market. It is called Lucky Cup. So now they use the strategy like Misue. They are under the same company. Like they use the best cost provider where they have 30 to 40% price cheaper than OR and providing a, how we say, second home strategies that offering same qualities, same vertical integrations, but even cheaper and better quality than OR. And we integrated in our valuations and could see the potential. There's no potential upside in this one for oil, non-oil business. Thank you.
I understand that the company normally report their segment financial based on mobility, lifestyle as you do your analysis, and why you choose to do some of the part valuation by company structure.
Thank you for your questions. For this part, my colleague will kind of elaborate more.
Thank you for the questions again. So The reasons we want to do some of the part is because we want to get the most realistic value as much as possible. If we break into oil, non-oil, and globals, it will only be just for OR only. However, there's a small business that OR trying to invest in that many of the investors try to outlook on that. So we want to incorporate it into our analysis, in our assumptions, to see what it will look like now. And it's also lead to a sell recommendations. Thank you.
And to add on my colleagues, so each business of OR is very different. So they will have their own business landscape, competitive fields. So we try to break down and try to do it battlefield by the battlefields. Thank you.
On your forecast model, do you think with slide that you have least confidence on your forecast and it will turn the recommendation from sell to buy in your view?
Well, there is several risks that could challenge our sell recommendation. However, the main one is the marketing margins, which mainly come from the regulatory upside from a deduction of oil fund contribution, since it definitely affects the profitabilities. So from our straight test, it showed that if the marketing margin could hit 1.8 baht per liter, we would change our recommendation to a buy.
And in your view, is there a chance that they can hit 1.8 baht per liter, and why?
Well, to be honest, the chance is pretty slightly, since historically, the marketing margin of OR never ever hit 1.8 baht per liter before, roughly around 1 baht per liter. But we also checked through the scenarios. Actually, the things that could increase the marketing margin could come from the external event shocks, including major political changes or the geopolitical conflicts. I have one example up here. Please go to Appendix C. As you can see in this very soon is an example of conflict between Iran and other country, recently US. Since Iran, they have a very important spot called Strait of Hormuz. Around 20% of oil need to pass through this route. And if one day the conflict become more severe and Iran decide to close this route, it would lift up the global oil price aggressively, benefiting OR to gain additional marketing margin. So it's one of the scenario.
And to add on my colleague, we believe that one of the reasons that make OR couldn't reach 1.8 baht, there's another reason, is the business structures. Since they are mostly dealer operated, 80% focusing on dealers, causing it to cannot capture the full margins like most of the peers where they have mostly company operated. Thank you.
I hear your rationales like the core business, problems with scale, the investments, prospects, and call say on Cambodia. How is that different from the market view?
Thank you for your questions. For Cambodia, what we see difference from the market is we believe that OR cannot expand their stations and also cafe maison in Cambodia anymore. And we believe that they will liquidate their business out of Cambodia. So we do DCF to capture the long-term strategies of business. So if they cannot expand their business, it affects a lot in their value. Thank you for your question.
Sorry. So you're saying that the economy of this gas station is getting worse, right, from various reasons that you have already explained. But you're forecasting that they will continue to increase CapEx. That's what I'm looking at, right? So what is the disconnection here? Why their CapEx, which has been around 1% of the revenue, why it go up to almost 2%, basically almost double?
Thank you for your questions. For the CapEx forecast, we based on the management guidance, five years plans about CapEx, and they try to invest more in mobilities, and the portion is around 65%. So it still be the main business that OR is continue to invest.
Your DCF is probably longer than 5 years? And how would you form your assumptions beyond management guidance? Does it matter too, or does it matter?
For the terminal growth that we use in our valuations, mostly we use 2% equal to Thailand long-term inflations, because our inflation target is from Bank of Thailand is around 1% to 3%.
Time is up for presentation and Q&A session. Thank you for your presentation. Now it's time for a 5-minute session for feedback and recommendation.
I like the slides, I like the presentation, group involvement. Where you can improve upon is SOTP, go by business, not by corporate entity. I think it's a bit confusing, but that would help. And just a small one, don't need to thank us for our questions. One way is just to repeat the question and then just answer. It gets repetitive after a while. And just the last bit is just on valuation. Spend more time on the valuations. It's very important in justifying your thesis of 11.8 baht. Thank you.
I think this is a good job overall. This is a bit of a difficult case for me. So it's more like a tale of two halves. In the first half, during the presentation, I really enjoy everything. Good flow, good pace, good presentation overall, participation from all the team members. And then you have Q&A, which obviously you seems to be struggling a little bit more when you got thrown the curveball. So there are a couple of things that I like. You use some of the part, that's good sign, but you didn't do it by the business, right? You do it by geographical area, which is obviously very counterintuitive. I think all the judges agree. I like the fact that you have regional case study comparison, right? You have a case study on Sinopec, right? After the peak oil demand, what happened to the Sinopec share price performance. That is excellent. That is great. And that is how you should do the work going forward. You look out beyond the border, basically looking for a global case study, regional case study, right? You also have case study on Motel 6, which is, again, I like that a lot. What I don't understand is that how come when you do the presentation, you stand here as a 5-person, and when you do Q&A, 2 suddenly disappear. There's only 3 members left, right? So again, it's kind of weird, and that's an area for an improvement. Overall, very good job.
Okay, to add on from me, I think number one, I think your 3 thesis is very good, easy to understand and quite precise. I would recommend you to do more on your valuation section. When it is come to valuation, it seems to dislink between your thesis to your valuation, because your thesis spend a lot of time on the OR, domestic business. But when you do the sum of the part valuation, you group that into just one, like OR in Thailand business valuation, just one part. So I think you should break that into a business segment and spend more time to defend on like what is your view on your mobility business and your lifestyle business. And I think on the projection before you present the valuation, I think you should focus on EBITDA or free cash flow rather than just presenting the revenue, because 90% is just oil business, so it's tell nothing to the judge on that part. Yeah, that's all from me.
I share the same view as other judges that you make a good presentations to highlight the key point that supports your investment thesis, right? And good at your update on the OR JV joint venture with Centel that it's very good that you update all information that have. And just one slide that I noticed, but it's a time up to have a questions on you that on Iran slide that you mentioned that during the oil price, OR margin expand. I'm not sure about this because in the past when the oil price spike, OR margin seem to pressure. That's a little notice. Yeah, but all good.
One last question, one last feedback for me, right? And this applies not to just you and your team, and in fact, it's a feedback to the rest of the team that's sitting in this room as well. This acronym thing is probably getting too far, so you don't have to follow that format, right? It doesn't have to be D1, D2, D3, S1, S2, S3, or any other acronym that you can think of, right? Focus on the essence, not the format, right? Fact over form, right? Get your investment thesis down clearly, right? It doesn't have to fit into any easy to remember acronym. That is not necessary, okay? Right.
All right. Thank you for your presentation. You are welcome to stay and watch other team presentations. Please welcome our final team, Team D. Feel free to start your presentation whenever you're ready.
When the market looks at OR, they see nothing more than a gas station. But today, we see the future. And this future will change the market perspective forever. Good morning, distinguished audience. Today, we invite you to join a timely investment opportunity by placing a buy on OR with a target price of 16.7 baht, presenting a 25% upside from yesterday close. Our recommendation is supported by 3-win framework: winner takes all, winning strategy, and winning against challenges. But first, let's take a look at OR's core engines. OR's operated businesses through 4 main pillars: mobility, lifestyle, global, and innovation. While mobility segment hold the highest revenue contribution, the real value is generated from lifestyle segment. And while market believe OR is trapped in the sunset industry, we see it differently. We see a clear strategic direction as OR is moving toward high value segment. This move is supported by growing coffee market as Thailand consumption per capita remains low compared to other developed countries. But how can OR capture this demand? First, scale. With over 4,000 locations, Cafe Maison branches is larger than our competitors combined. Second, its strong brand equity and back-end operation make Cafe Maison the top choice for franchisee, allowing faster expansion with minimal capital. Behind the scene, Cafe Maison fully integrated supply chain has passed break-even. So now, every incremental capsule flows directly to the bottom line, forming an unreplicable cost advantage over its competitors. What about the oil industry? The stable crude oil price and the oil fund turnaround act as a buffer to limit downside risks. Internally, the pipeline activation in the northeast regions improve operational efficiency and reduce logistic costs per liter. Together, we project OR's marketing margins to expand at a sustainable range above 1 baht per liter. To conclude the first thesis, while independent players are closing down, branded players continue to eating up market share. In this sunset industry, the strongest ecosystem win, and OR is set to be the ultimate last man standing.
The market believes that OR has a track record of underperforming investment, but we see 2 game-changing initiatives. First, the budget hotel. OR is partnering with Centel to pilot budget hotel within PTT station, and this project is supported by 2 key success factors. Platinum format station create a one-stop ecosystem that competitors cannot easily replicate. And while competitor cluster in the city center, OR enter blue ocean zone along inter-provincial routes. This project unlock an incremental NPV of 800 billion baht. Secondly, 50% of SME cannot access loan and are forced to rely on loan sharks. OR enter the virtual bank market, providing financial access for unserved and underserved segment. Joining this transition by leveraging an unmatched scale of almost 100 million users, combining with AIS and Baotang, and superior risk profiling from its high-frequency data of 3.9 million daily traffic, which enable precise credit scoring. With OR holding a 20% stake, we project an incremental value of 1.05 baht per share. Together, these 2 projects provide a potential upside of 9%. But is this growth plan achievable? Let's take a closer look. Cash adequacy ratio indicates that OR generates sufficient cash flow to fund expansion. Further proven by exceptionally low DE ratio, provides ample headroom for future borrowing. On the other hand, there's an unjustified discount to OR from the market's overreaction on Cambodia conflict. However, the reality is far less severe than the market fears. Oil export restriction to Cambodia has been mitigated by shifting supply sourcing to Singapore and Laos, ensuring that the remaining of 127 stations in Cambodia can continue operations. And with only a 5.8% EBITDA contribution, the Cambodia segment poses limited risk, further supported by the sales volume pressure has already passed its peak with a much lower decline rate. Moreover, there is also an unrealized ESG premium.
OR initiated many ESG initiatives, but today, we highlight 3 key examples based on 3 factors. Starting with sustainable aviation fuel, it reduced 10,000 tons of CO2 and adds an NPV value of 2.64 billion baht. Moreover, OR outperforms its peers with 12 aviation stations. Second, Thai debt project. It raised an income of 565 baht per head and adding NPV of 240 million baht. Finally, governance. OR outperforms the industry with a 5-star score And according to the Journal of Social Science, this superior oversight lowered the cost of capital by 4.66%. This implies to a 3.3% ESG premium, lifting our target price to 16.7 baht. Moreover, we follow the ESG framework utilized by the MSCI ESG Research and Bernstein, and the results shows that OR is underpriced in terms of ESG profile. Now, let's turn from the assumption to the financial projections. We project a sustainable revenue CAGR of 1.57%, driven by the recovery of jet fuel and increase in number of cups sold of Cafe Amazon. Operationally, efficiency is sharpening. The cash conversion cycle is tightening, unlocked by the activation of the Northeastern Pipeline and PTT Group synergies. Lastly, profitability. Margin is expanding, supported by the favorable in-marketing margin and increase in lifestyle contribution, positioning OR well above the industry average. Now that we all know OR is a good company, is it a good investment?
To reflect all types of shareholder, we initiate free float based target price with 75% sum of the part DCF and 25% sum of the part EV per EBITDA. Let's start with sum of the part DCF, resulting in a value of 17.28 baht. We calculate price across 3 core segments and other joint venture in order to get the most realistic model. We forecast revenue separately for each segment, product, and geographical area. In multi-segment, we broke down each oil product independently. For example, E20 is derived from each component of the price structure by running regression on equilibrium price and marketing margin. We also run regression on market volume sale multiplied with market share based on SWOT analysis. And market share assumption is supported by in-field team survey. The new station sale is driven by management guidance expansion plan. We use bottom-up data resulting in different discount rate, and the terminal growth rate is assumed to be 2% aligned with Thailand long-term inflation rate. To support our DCF, our sensitivity analysis show that there's still much room until we change the recommendation. We use sum of the part EV per EBITDA multiple to get a relative price of 14.83 baht. Moreover, the stock is being traded lower multiple level than historical average, showing the strong signal to buy. After averaging both valuation, we get a target price of 16.7 baht per share.
To assess the risk to the good story, we ran stress tests. We focus on 2 key factors. First, OR is exposed to the movement of global crude oil price, which is translated to the cost. However, we see that the marketing margins will need to fall by at least 17% in order for us to change the recommendation. To reduce this impact, OR is diversifying to the lifestyle segment, which reduces reliance on the volatile fuel income. Second, a faster than expected EV adoption would cause the demand for gasoline to decline. Despite this, we see that the gasoline sales volume will need to drastically reduce in order for us to change our recommendation. On top of this, the company operates Thailand's largest EV charging network, positioning the company to gain value from this transition rather than just being disrupted by it. The other factors were also considered, and the worst outcomes for each one were simultaneously modeled to give us a bear case of 19%, compared to a bull case of 36%. To round off our analysis, we ran 10,000 simulations and achieved an 81.3% buy probability. In conclusion, we believe OR is a winning investment case based on 3 core pillars: winner takes all, winning strategy, and winning against challenges. With strong fundamentals, we issue a buy recommendation with a target price of 16.7 baht. Ladies and gentlemen, in a volatile and disruptive industry, we present to you the ultimate winner. Thank you. The floor is open for Q&A.
Thank you. It's time for Q&A.
Can I focus on asset monetization? You mentioned your second point. Can you go over your valuation for virtual bank? I think it's 1.05 baht. That's a big amount.
Thank you for your question. So we incorporate the virtual bank by using the, can you go to the virtual bank model? We use the residual income model to value the virtual bank since it is the financial industry and also it is appropriate for the company that will not generate positive cash flow in the beginning phase. And for the ROE assumption, we conduct the peer group of international peer from virtual bank, and we use the average ROE of each year to as our assumption from 2026 to 2031. And we believe that ROE will gradually decline toward target market average of 17.3%. And as a result, we get the value of 1.05 baht per share, or potential upside of 7%.
Can you break down your business, the valuations by business? It was quite quick. How much per share in
Can you go to key variation summary? So the mobilities. Okay, so the mobility segment, a lifestyle segment, generate the higher the proportions of 7 baht per share. The most value come from mobility and lifestyle.
Okay, my question is straight to your core of your investment thesis here, is that the winner will take all, right? You're the dominant gas station operators, and you're becoming more than that, right? And you'll add retail, you'll add hotel, you'll add a lot of restaurant, coffee chain. Now, the problem here is that out of your 4,600 gas station, 80% is dealer-owned, dealer-operated, right? Which save the capex for OR, right? But when you ask these guys, thousands and thousands of them, to transition with you, how are you going to convince them? Because it will take a lot of money, right? From operating a standalone gas station with a coffee shop. Now you have to build a hotel, now you have to build a restaurant, laundromat, and so on and so forth. There's a lot of money that you're going to need to ask your dealer to follow through. So how are you going to convince them how OR will do that?
Thank you for your question. The budget hotel pilot is piloting six hotels in their COCO stations, or company-operated and company-owned stations, and this will serve as a model for in the future when they want to expand more, and they can give this as an example to the franchisees, and it will help them expand.
Can you go to the budget hotel model? So we also conduct a real growth option of the budget hotel, since OR has a right but not obligation to exclusively expand the budget hotel within PTT station. So we conduct three scenarios, including expansion, delaying, and divestment. And we also apply the probability of each scenario. And if we calculate the result of each scenario multiplying with the probability of occurring, we get the value of virtual bank at 0.48 baht per share, or a potential upside of 3%.
So out of the 2,400 dealer-owned station right now, how much did you assume that will follow through and transition themselves into a platinum format? What's your assumption here? All of them? All 2,400 of them?
So right now there's about around 500 platinum stations, and
Okay.
We believe that OR will only expand or build the platinum stations in the prime locations, and which is not all of the 2,400 stations.
So 500 right now. You have 1,900 more to convince. So what's your assumption here?
So we believe that the total addressable market of the budget hotel is within the 500 station, platinum format station. And we believe that in our base case model, we believe that the budget hotel can expand to 77 stations.
Thank you.
On your thesis of the winner take all, like I think from the past, OR has been losing market share. So, and I think you highlight just only like a budget hotel to drive back their market share going forward. So, what is your analysis on the competitors doing or competitor strategy as well? Why OR will gaining market share back going forward?
Yeah, thank you for your questions. Can you go to ecosystem ratios? So we have analyzed the competitors and we conducted ecosystem ratio, and we believe with the complete stations, OR can gain its market share by its non-oil businesses that will drive the traffic back in the station.
To add on my colleague, competitors like PTG, who has the Pantai, they're trying to take the market share from Amazon Cafe by having promotions, and we view this as an unsustainable incentive for them, because it has resulted them in realizing a lot of losses, and they have to scale down their discounts. So it's in the future we expect ORs to be the last man standing.
So as you have a buy recommendation on OR, do you think OR as a characteristic of company or stock, do you think it will cash flow compounding company, or do you think it will capex growth company in your view?
Could you please clarify your question?
I just want to know your views on your buy recommendation on OR stock, right? Do you view OR investment stock as a cash flow generation company like cash cow that you got is slow growth, or you think it will need heavy capex to invest more and have like a growth stock? Yeah.
We see that they would require less capex than other competitors, mainly because they have an asset-light model, with 80% of them being franchisees.
And how about non-oil on expansion on the non-oil business, like they have that you mentioned on the joint venture with Centel? How about your view on the other investment in the future that have support OR growth apart from the mobility business?
Yes, so the expansion on budget hotel is also going to be aimed at the franchisees. And as OR owns 49% of the budget hotel, with 51% being Centara, we believe that it will not require as heavy capex as the market believes.
On your terminal growth, why do you think mobility and lifestyle business will have should have the same terminal growth of 2%?
Thank you for your questions. We apply 2% of terminal growth to align with the target inflations of Bank of Thailand. So for all segment, we believe the primary driver is the marketing margins, which include the operating expense such as transportations, terminal maintenance, and outsourcing, which all of these expenses will naturally inflate towards long-term inflation.
On top of this, we see that 2% is very conservative, and it's still a buy recommendation, even though we incorporated the transition into a sunset industry, which is supported by the EV transition, and it's still a buy recommendation.
What's the estimated impact from EV transition on the traffic to your gas station?
Thank you for your questions. So we believe the impact of EV adoption is limited because, can you go to volume breakdown, please? So if you look in terms of volume proportions, only 18% is gasoline, which is directly impact to the EV adoptions, and the rest 60% is for commercial segment, which less likely to impact from EV adoptions. And we also incorporated the impact of EV with the gasoline, so the market size of gasoline is declining. And
on top of this, we also ran a sensitivity analysis.
Right. So what's the number? What's the percentage of the traffic decline?
Right. So we quantified it as the volume sold of the gasoline, and we believe that negative 17% would result in a sell recommendation.
Okay.
Time is up. Now it's time for a 5-minute session for feedback and recommendation.
I can start. Yes, I can see you spent a lot of time. There's a lot of slides and very detailed and probably answers to other questions that we didn't ask. So good job. Some thoughts. On the valuation, the 75-25% breakdown between DCF and I think relative, it's subjective, but I like that. And also the breakdown by the business segment, just to value how much is mobility and so on. I would advise spending more time on the key assumptions, the key drivers that run into the assumptions. Clarify why marketing margin you say it is and why this is different from the market. Okay, the budget hotel virtual bank I think is maybe weak at times. They're not operating yet. It's probably going to lose money in the future. And you have a 12-month kind of target price. The question is how much the market would appreciate or value budget hotels and the bank on a 12-month horizon at this point. Thank you.
First of all, I admire your courage to be a contrarian in this particular company. Obviously, the narrative, the mainstay narrative in the market right now is this a sunset business? It's a sales, basically, right? So I admire that, to be a contrarian. But again, I mean, when you are contrarian, you have to be really comprehensive in the way that you prepare your investment thesis. You have to be very complete, right? And I found that there's a lot of hole in your investment thesis, and it's fine to have a hole if you can address that in the Q&A, right? Maybe you intentionally leave a hole in your investment thesis so that we could ask during the Q&A, right? But it turned out that you didn't really prepare that much as well during the Q&A. I find investment thesis to be relatively weak. And in terms of the presentation, I think it's very nice. Good flow, good pace, good slide quality, no problem with that at all. But again, I don't understand. When you present, you would stand in front of us as 5, as a team. When you do Q&A, 2 disappear. And this seems to be a pattern. You're not the only team that do this. So I don't really understand what's going on here. Is this some kind of a new technique in the presentation or what? But obviously there's a team involvement here, and that is one of the criteria that you will be graded upon. So, think about it, right? I mean, you stand as a team throughout the whole thing, right? So that's my feedback.
Okay, to add on from the other judge. So, okay, first of all, I think very nice presentation, especially on your valuation part, like a lot of exciting technique that you use on your slide. So I see your input there. Just some recommendation from me. The first one will be on your allocation of the content. So budget hotel and virtual bank, I think is too early, and it's just a starting point. So I think you allocate too much of the time on that part, comparing with the core business of OR. That I think you should spend more time on that one. And second one is if you want to defend your thesis of the winner takes all, then with the track record of OR that losing market share, I think you should spend more time on why you think this business model will come back and will take over the other competitor. And also, I think you save your competitor analysis into your Q&A, but I think it would be good if you present this upfront.
So for overall, I like your presentations that you highlight your business in each segment, and when they just ask about the assumption or detail, you have a slide to show why you forecast in this way, right? I love the detail that you have in your model. And I think for my question that ask you, I think you have a good reasons that show that you have a good investment system that align with all your recommendations. Yeah, overall I like this.
All right, thank you for your presentation. Now that we heard from all the teams, we will take a brief pause to give our esteemed judge some time to finalize their score, and we will be announcing the result shortly. So please come back and meet us here in the hall at 11:40. And for all the 4 teams, please come back earlier. Come see us at the stage, at the podium here. All of the 4 teams only at 11:35. We will teach you how to get your trophy professionally. distinguished judge, CFA board members, professors, Research Challenge finalists, and esteemed guests. It is truly an honor to stand before you today as we reach the final stage of the CFA Research Challenge in Thailand. On behalf of the entire Research Challenge team, I would like to extend my heartfelt congratulations to each and every participating teams for your incredible effort, dedication, and commitment over the past 5 months. We know that it is not easy to balance the intensity of this competition with your schoolwork and personal life. Not everyone could keep going, but you did. This journey, we hope, has been one of the growth, learning, and self-discovery for all of you. I would also like to take a moment to recognize the invaluable role of our judges who have played in this competition. Your expertise, thoughtful, and challenging questions have been instrumental in shaping today's competition. Your dedication and insightful decisions have brought us to this moment where we can celebrate the remarkable achievement of our finalists. With that, it is my great honor to invite the Vice President of CFA Society Thailand to the stage to present a token of our appreciation to our esteemed judge. Please join me in welcoming Kun Pasuvut Virai Niran. Let's give a big round of applause as we invite each of our judges to the stage to receive their token of appreciation. Please welcome Kun Asen Kanbarisut. Kun Pacharashai Putikun Sathit. Kun Pasin Pawa Suthikun. Kun กอบพร คุณสุรกิจ Thank you all for your invaluable contribution to this competition. And now I would like to invite one of our board members at CFA Society Thailand to give a little speech before we announce the winners. So please join me in welcoming Kun Ging Pai Kusakun Niran.
สวัสดีค่ะ so I have to say I'm so excited to come back here again on this stage, and it's been very long time that I've been volunteering for this research challenge. So again this year my staff asked me to come up here, talk to all of you a little bit, and also I don't want to forget, she asked me to also do some advertising for our society. So can we have the advertising one before we go to any other speech? If you haven't scanned the QR code here, the CFA Society Thailand Instagram, if you don't know, we already have Instagram. Do we have TikTok already? Do we have TikTok now?
No.
Oh, not yet. Maybe in the future, if we have TikTok, don't forget to also follow us. So in the CFA Society Thailand Instagram, we have the Linktree link on the red arrow. You click on that link and you will see all the events that we are organizing. Not only the CFA Research Challenge, but also many other events. For the Society of Thailand, we don't organize the CFA exam, but every other things, like the candidate gathering, or the mock exam, the research challenge that you are joining here today, and also many other seminars that we are organized by our society. So if you haven't clicked that, go through that and see the updated event that we have. And we actually have many upcoming events, so feel free to join. Many events are also allowed for the public, for the students to also join, and of course, many of them are supporting the candidates. And if you are thinking that you're gonna be taking the CFA exam, don't forget to join our candidate gathering. So that's the end of our advertising. And after that, before that we going to announce the result. Actually, for me, I've been here on this stage 17 years ago. I was here in the final round of the research challenge. That was actually the first year of the research challenge that was organized here in Thailand. And I was that student that was here shaking. I don't remember what the judge asked me. I didn't remember any answer that I gave because I was too excited. I was shaking so much. The only thing that I remember was the feeling that I had. It was like so stressful, so shaky. I was too excited. But I made that through. I know I didn't do that well. And actually the person that was sitting there, Kun Pacharachai, that was your judge today, he was the winner on that year of the research challenge. Yeah. So you can see, I was here as all of you. I understand you. I understand how you feel. I understand how the feeling of being the winner and not winning feels like. I was there that I didn't get the trophy. So that 17 years ago, after that we finished the research challenge, I finished my university. I went to work as the equity analyst. JB Kun Pacharachai got the analyst job as well, but on the buy side. I work on the sell side. So we both had our own journey. And I think the most important thing is that after that we went on this challenge, we came on this stage, on the competition. After that, coming back to serve on the volunteer is something that I feel so valuable. We come back here again so many times, me and Kun Pacharachai, and actually many other students that was here on the research challenge also came back to be our mentor, to be our judge, to help the next generation growing on their professional life. And I'm so proud of that, and I love it. I love to see all your passion, your energy. You did so well today, and I really love it. That's why I keep coming back here, and that's what I see the most valuable. So today, I know that we're gonna have the winning team. We're gonna have the team that's not gonna win, and you're not gonna be making to the next round. But well, you also see, right, that the stock today that we have, some of you sell, some of you buy. Not everyone like the same stock. Not everyone issue the same recommendation. And for JB, that you manage the fund management that you're doing, some of the stock you sell, some of other fund, people buy it. So people have different opinion on all this recommendation, on all this stock. On so many of this are so subjective, but it's the mix of arts, the science that we have. So today, when we organize the winning team, some of you might be agreeing on the result that the judge announced. Some of you might be quite disappointed. Oh, I like that team better. But if you look around, there would be some people that agree, some people disagree. So in this journey, what I want to tell you before that we're going to be announcing the winning team. We're going to have the winning team, the losing team. But your life is not just a sprint. This competition might look like a sprint. You have a few months that you have to finish all of that. Sleepless night that you have to finish all this presentation. I know how stressful that could be. But after that, once you get the result, you can be sad for a bit. You can be super happy on the result. But the most important thing, your journey is actually a marathon. You keep going. Don't just take the result today as something that you hold it on for too long. You can be super happy about the result. You can be sad about the result. It's fine. I didn't get the trophy. He got it. But I'm back here. I'm still walking on this journey. I'm still supporting the society. I'm still happily working here. And I think the most valuable part is that you join this competition. You keep learning. You keep your good work. You keep your passion. So today, before that we announce whatever the result come out, you have done such a good work. We are so proud of you. You have to be proud of yourself. Thank you.
Thank you, Kun King Pai Kusakuniran, for an inspiring speech. All right, so we are now moving on to one of the most exciting part of our event, the announcement of the winners of the Research Challenge in Thailand. We'll begin with our second runner-up. Please note that we have 2 teams in this category, and the order of the announcement does not reflect their scores. The first of the 2 second runner-ups is Thammasat University Faculty of Economics. And the other second runner-up is Assumption University MSME Bachelor of Business Administration. All right now, so please join me in welcoming Kun Prasawut Vilainiran for presentation of the trophy. All right, so now I would like to invite Team D, Thammasat University Faculty of Economics, to the stage to receive the trophy. This year, the second runner-up prize are proudly sponsored by Kasikorn Asset Management. To present the prize of 5,000 baht, I am honored to invite Kun Thanandan Cholitgun, Chief Investment Officer at Kasikorn Asset Management, to the stage. Now let's move on to our next second runner-up. I would like to invite Team A, Assumption University MSME Bachelor of Business Administration, to the stage to receive the trophy. Once again, I would like to highlight that this prize is sponsored by Kasikorn Asset Management. And to present the 5,000 baht prize, please welcome back Kun Thanandawn Cholitkun. Let's give them another big round of applause. All right, guys, now the moment we all been waiting for has arrived. It's time to announce the winner of this year's CFA Institute Research Challenge in Thailand. This team has demonstrated exceptional analytical skills, deep financial insight, and a commitment to excellence. Throughout the competition, they have impressed the judge with their research, strategic thinking, and professionalism. Today, they stand at the top, earning the title of the champion. So please join me in giving a huge round of applause to our winning team. And the winner is Team B, Chulalongkorn University, Faculty of Commerce and Accountancy. Congratulations on securing the top position, and that means the first runner-up goes to Team C, Assumption University Finance, Bachelor of Business Administration. All right, may I invite our first runner-up to come forward to the stage to receive your trophy. This year, the first runner-up prize is proudly sponsored by Kasikorn Asset Management. As a recognition of their outstanding performance, they will receive a cash prize of 20,000 baht. So, invite Kun Thanandawn Cholitkun again to the stage,ค่ะ. Let's give the first runner-up team another round of applause for their incredible performance. Well done. It is time for us to celebrate the winning team. Please join me in giving a big round of applause for the winners of CFA Research Challenge in Thailand for the 2025 to 2026 season. Team B, Chulalongkorn University, Faculty of Commerce and Accountancy. so this year the champion prize is proudly sponsored by Kiet Nakin Pathara Financial Group. As a recognition of their outstanding achievement, the winning team will receive a grand cash prize of 50,000 baht. To present this prestigious award, I am honored to invite Kun Pasin Pawasuttikul, Senior Vice President, Corporate Finance Department, Kiet Nakin Pathara Security Public Company Limited, to the stage. Congratulations to our winning team on this remarkable achievement. Your dedication and hard work have truly paid off. We hope your team will continue striving for excellence and in everything that you do, and that this experience serves as a stepping stone toward even greater success in the future. Alright, so now I would like to invite Kun Kingpai Kusakuniran, CFA Society Thailand Board Member. Our sponsor from Bloomberg, Kun Chalat Udom Sangphet, Bloomberg Relationship Manager for Thailand, and Kun K. Gamo, Head of Enterprise Sales, North Asian, Bloomberg. Once again, congratulations to our winning team. On behalf of the CFA Research Challenge organizing team and CFA Society Thailand, we extend our congratulations to all participants for your outstanding effort and dedication. Thank you for being a part of our event today, and thank you to everyone who joined us today at the Stock Exchange of Thailand and to those watching live at home. We hope this competition has been an inspiration for the next generation of finance professionals. Wishing you all continued success and wonderful day. Thank you.